What is a stock? Well, basically, a stock is a small portion of a corporation that you'll be owning. So once you buy shares of a corporation, the small shares are called stocks, shares of stock. Why do people want to own stock? Or why do people buy stock? Well, stock is an asset. So when you buy a corporation like Facebook, Amazon, McDonald's, Coca-Cola Company, you're basically being entitled to part ownership of their company and you receive earnings. You can receive earnings in the form of a dividend or capital gains. Dividends means when you buy a share, you get a portion of that money back in a dividend. For example, let's say if a company payout ratio is 3%. If you buy a share for $1, you're getting 3 cents back. So a lot of people take advantage of this. The more shares they buy in the company, the more money they get back. And this control how much dividend you get based on the company's dividend yield. A lot of people take advantage of investing in stock for the form of dividends. You get income. The company may pay dividends on a monthly basis or a quarterly basis, which just means every 3 months. Usually companies pay every quarter, every 3 months. So what the investors like to do is they like to have a certain amount invested so they get a certain money back during that quarter. And a lot of people invest in dividend stocks, for example, for the simple fact that you get income back. Like I said, you get that automatically income coming in 3 months, every quarter, or once a month, depends on the stock. And a lot of people take advantage of this because this is passive income, money that they're really working for. All they doing is buying the stock and they get a small portion of that money back. So it's money that you really don't have to work for. And it's easy way to make passive income. Another way to make money from stocks or corporations is capital gains. Capital gains is money the company uses to produce more products or to enhance their business for the long run. Like for example, a company might not pay a high dividend yield for the simple fact that they keep that money in their corporation to build their corporation. A good example of this is technology companies like Apple. Apple come out with the new iPhone, the new iPad, the new headphones. So when they make those new products, when they create them new products and the public buy them, the stock price rises. And that is a form of capital gains when the stock price rises. So if you buy a stock, if you buy Apple stock today for $300, in the next 2 weeks, it might be $350. Well, you done gain $50 for capital gains plus how many shares you have. So you see how that works? That's easy money that you can make in just by owning stocks. You're buying stocks, you're entitled to two things: part ownership of the company and earnings. When the company profits, you profits. When the company is doing bad, pretty much you're doing bad. And when the company is doing good, basically you're doing good. So a stock is an asset that anyone should own. Invest in your favorite companies, invest in these companies that's doing good, and you can make free profit just by owning shares of stock.